Hi, this is Dax with Elemental Risk Management, and today I'm going to talk to you a little bit about garage insurance rating, how insurance companies charge you, determine your charge as a garage owner, car dealership owner, how they determine your charge for liability. So let's get into it. So I've worked with car dealerships and garage type businesses for about 15 years. And every year, maybe even every month, I get questions, complaints, frustrations from a client, from particularly auto dealers, but complaints about how they're being charged for their liability insurance. And when an audit comes up, if they have to pay more money, why they're having to pay more money. And I've had this conversation over and over. So hopefully this helps shed some light on the subject, clear up any confusion, and hopefully remove confusion. So insurance companies obviously have to figure out a way to charge an appropriate amount of money, premium, for a policy. So the idea being a small business, 1 or 2 employees, a couple $100,000 in sales should pay less for their insurance as a large business with a few hundred employees, hundreds of $1,000s in premiums, and $1 million of sales. That larger business clearly should pay more money, more premium for their insurance policy. So garage insurance policies, the way they're rated is based on your total employee count. And there's a few different components to this. So they don't just take, if you have 100 employees, let's make it simple. They don't just take all 100 of your employees and charge, let's just make up a number, $1,000 each. We'll stick with that $1,000 number. So what they do is they take the names of the employees, they want their driver's information because they're going to run motor vehicle records and make sure that they're trustworthy drivers. And they're going to take their job description. So that's one of the first components. A owner, a salesperson that has regular access to vehicle on a daily basis is obviously going to pose a higher liability. So those guys, they're going to charge them, not the most, but they're going to charge the most of the individuals working in the dealerships. And I'll quickly say what they charge the most for is household members that don't work in the dealership that have access to a demo. So a spouse, a son or daughter that has access to a demo is going to pay the highest rate. Let's say 1.25% of that $1,000 rate, so $1,250 per. I'm just trying to use simple numbers to keep it consistent. Okay, salespeople and owners, 24/7 access or daily access to a demo. They're going to pay the full rate, $1,000, or the rate times 1. Okay. And then next on down the line is going to be technicians. They may not have as much access to driving a vehicle, but technicians, lot people that work around the lot, they may drive a vehicle occasionally. So let's just say, for our purposes, the full rate's $1,000. They're going to charge 0.8% of that, 80%. So $800 a year for a mechanic or technician or lot person. Next on down the line is administrative clerical people, right? They're in the office. Because of the nature of garage policies, anybody's covered. They're driving a vehicle regardless if they're reported to the insurance company or not. So as you can imagine, with that kind of access to the vehicle and potential for liability, there's an increased height level of concern from an insurance company that somebody could jump in one of your vehicles and cause an accident, run a stoplight, whatever. So those clerical people, let's say they're going to charge for those individuals 0.20, so 20%. So if the full rate's $1,000, they're going to charge $200 for those guys annually. So a much lower premium, but they're still charging something. They have access to a vehicle. They got a rate for them. because they can still cause an accident and it come back on them. They have to charge an appropriate premium for that. So we talked about the different categories. What happens is you estimate on the front end your employee. You provide your agent a list of all your employees with all that information, job title, full-time access to a demo or not. Obviously, the person with the demo is going to be a higher charge because they're driving a vehicle all the time. And keep in mind, back in the 90s, in the 80s, everybody in a dealership had access to a demo. Now it's typically very limited. Most dealerships only allow really the owner to have a demo, because having a demo increases that liability because it's 24/7 access. So if you gave it to a salesperson, they go to the bar on the weekend, whatever it is, your insurance company's picking up that liability. So those days are kind of over, because what happened is those individuals had accidents, your dealership insurance premium goes up, and you're frustrated, and you look at why. It just doesn't make sense from a business perspective to give access to many demo vehicles. And then full-time and part-time. Obviously, a full-time person you're going to charge more for than a part-time. So all those components make up what your total garage liability insurance policy costs you. Hopefully that helps remove some confusion and provide some understanding. There's no way around it. There's no bending the rules. That's the way insurance companies do it. It's the way the ISO policy, Insurance Services Office's copywritten policy, is designed to appropriately capture and charge an appropriate premium. Okay, last step, audit. So into the policy year, you switch to another insurance company, you stay with the same one, doesn't matter. You're typically going to get audited. Auditor's going to come in and they're going to look at all the employees that you had during that period of time during the policy, which is probably 12 months. And they're going to want to see the reports, see how long they worked for you. And they're going to really drill down on that time period and charge you appropriately for those time periods, because obviously throughout the year, there's going to be turnover. And if you estimate it correctly, you should be close. You shouldn't have to pay any more. You probably won't get any money back. But if things change, the employee list that you provided to your agent wasn't correct on the front end, whatever the case may be, you could end up paying more based on that actual audited data that looked back at what your employee universe looked like during that time. So hopefully that sheds some light on garage rating and how insurance companies determine what you're going to pay for the year. But if not, feel free to contact us, contact me. It's an issue that I've had a lot of discussions about, and I will continue having discussions about for the rest of my career, and I'm happy to answer questions.